Okay, so again I've told that the firms have three stages of production. Okay, so the three stages of production involve primary sector, secondary sector, tertiary sector. The last one is quaternary sector, which is again a subsection of tertiary sector. If we talk about firms, firms do a lot of things. Firms produce different things, and they are in different sectors. The primary sector deals with the first stage of production, where we can observe this thing. We can see that this thing, that the extraction of raw material or the raw material is taken or received from the nature. If you are receiving something from the nature, you consider that firm as a primary sector. I can give you an example of that. Farming is considered as the primary sector. Those persons or those labor workers who are working in the primary sector, they are termed as farmers. They are doing farming. What they're doing, they are doing the harvestation of the vegetables which are there in the economy, which is there in the country. What they do this harvestation on the land, and they get the vegetables out from there. So first is primary sector. You can talk about fishing, you can talk about farming, you can talk about a lot of things, but those things which are related to the nature. The third example of this primary sector could be the trees. You know that trees are
Oh
planted
yes, yeah.
again and again, and what we get the wood from there, and after cutting the trees we also get the papers from there. Okay, I hope you got this clear, that whatever things are acquired from nature, they are termed under the section of primary sector. Those businesses who are dealing in providing those factors, let's suppose there is a store in Dubai, there is a store in America, in any other country, and they are dealing in providing fresh vegetables. So the person who is supplying those vegetables to the store is in the business of primary sector. The store itself will be in the tertiary sector, because the store is only selling that, not acquiring it. Got
Okay.
it?
Yes, sir. Yeah.
Secondary sector. Again, you have got the raw material from the nature, you have got it, and what will you do? You will process it somehow. If it is a vegetable, the restaurants, have you observed the restaurants?
Yes.
When
Yeah.
did you visit any restaurant last time, Rahul?
Uh, it was on Sunday. Yeah, it was on Sunday. We went to a restaurant,
Okay. In
my
the
family.
restaurants, you would have observed this thing. Primary sector, those who are selling the vegetables, the restaurant could have acquired the vegetables from those businesses, or maybe those vendors who are supplying the vegetables. So those vendors who are supplying the vegetables will be coming under the primary sector. The restaurant itself will come in the secondary sector. Why? Because the restaurant has acquired the vegetables, which are the basic components of making the food. They have acquired the food, they have acquired the vegetables from the vendor who is in the primary sector. And now what they do in the restaurant, they will process the food in the end. Got it? Clear on this example?
Yes, sir. Yeah, I'm
What it
clear on
will
this
do,
example.
there are two words which will indicate that this is a secondary sector. The one first word is manufacturing. If there is a word that the business manufactures something, so it means it is a secondary sector. The second word which comes commonly in your questions of CI or other examination boards, what is that second term? The second term is processing. So it is written in the book in front of you, involved with the processing of raw materials into semi-finished and finished goods. Either it will be a semi-finished good or it will be a finished goods. So it can be a consumer or a capital. You know what are consumer and capital goods. We have gone to the PPC chapter a long time ago, so you will remember that. Clear till now?
Yes, sir. Yeah, I'm clear right now.
Okay. Let me give you an example of the first one. Primary sector acquired wood from trees, correct? The secondary sector manufactured a table or a furniture from that wood, because obviously the secondary sector contacted the primary sector and acquired the woods which are taken from the trees. So the secondary sector, what they did, they converted those woods into a table maybe, or they converted those woods into a chair maybe. The third stage is tertiary sector. In this sector, in the tertiary sector, there is nothing produced as such. Whatever things are already produced, they are sold in the market. Got it? So the examples of this means giving services. Tertiary sector always deals with giving services. So what we call it as, the services could be banking, insurance, and tourism come into this sector. And this providing of services means that you do not produce anything at all. If I manufactured a table or a chair in the secondary sector, I'll be selling this chair to any other business, and I'll be seeing that business to sell the chair. So those businesses dealing only in the selling of chairs or selling of any other thing, they will be termed under the tertiary sector of the economy. Any questions so far?
No, sir, no questions. The thing is, we've learned this in business studies as well. So yeah. So I use the knowledge from like my business studies like
Okay.
textbook, and I'm able to relate to it. That's why.
So you have taken it from the business studies section. That's good. So obviously,
Yeah.
I thought you have only taken economics as a subject, because that's why I was giving more emphasis on that. Because if you've learned all of this in business studies, so this would be a quick revision for you, nothing more. Okay, the last one is quaternary sector. This means a subsection of the tertiary sector. It involves selling those services or giving those services which are somehow related with the technology or knowledge based. Okay, it relates to the knowledge based services which are provided by the business. So that's why we term it as quaternary sectors. If anyone asks you how many sectors do we have in an economy, so we have only three sectors: primary, secondary, and tertiary. Okay, these
Yes.
are the most common ones. Now we'll see that which sector is important in this. In these, can you talk about Pakistan? In this table, you can see 21.1. Which sector is important according to the percentage?
The tertiary sector.
Hmm. And for India, if I ask you,
Tertiary again.
okay, for China,
Tertiary. For
for US,
USA, it's yeah, tertiary, and Hong Kong
all
as
have
well.
the
It's
tertiary sector. So again, this is not true. Obviously, this is somehow table made in order to make you learn this concept. But again, Pakistan does not have a lot of services in tertiary sector. That's the main reason Pakistan is suffering behind. The reason is that because Pakistan is not focusing more on the tertiary sector. We are an agricultural based country. From the day one, when a student studies geography in his for his examinations, what that student learns, the student learns from the day one that we are an agricultural country. And when we talk about agricultural country, so again we are rely on primary sector, and when we rely more on the primary sector, so again we cannot predict the output, we cannot predict the revenue which will be earned from that output. Got it? Okay, now we have second thing, which is ownership of firms. Ownership of firms are divided or differentiated on the basis of which economy do we have in the country. How many type of economies do we have total?
there's mixed economy, planned economy. Wait, hold on.
The third one,
Oh,
called the free market economy. Okay,
sorry,
sometimes
sir.
free market economy.
Oh yes, free market economy. Yeah.
Sometimes the question refers to that as market economy. Sometimes the question writes it as free market economy. So these both are interchangeably used in the question papers. That what are the advantages of a market economy? So sometimes those students who don't know that market economy is also termed as free market economy, they become confused over there. Okay, so market economy or free market economy, they both are the same. Secondly, planned economy or command economy, they both are the same names for one thing that is interchangeably used. And the last one is mixed economy. There is no other name for that. There is only one, which is mixed economy. So the size of the firms. Size of the firms, how do you know the size of the firm? If you talk about business studies, you would have learned chapter number 3 in business studies, correct?
Yes, it's enterprise and growth. I think
Yes,
that's
enterprise
what.
and growth, correct. So there are four methods of comparing the size of the businesses given over there: value of sales, value of output, number of employees, and value of capital employed. Correct? Yes or no?
Yes, sir. Yeah.
Okay. So those four methods is given over there. But in economics, you can see that the size of a particular firm is influenced. Influence means it is changed or it can vary according to these number of factors. Okay. And what are those factors? Again, these are very obvious. But if you will learn that, if you will read that, So you will learn about these things. The first one is the age of the firms. Uh, do you know two of the big brands which are there in Pakistan, Walls and Omor?
Walls and
Omor, Omore, ice
oh
cream.
yes, yeah.
Okay,
Oh yeah, these two are ice cream brands, I believe.
yes, these two are ice cream brands. But if I talk about Walls, Walls is the most, what I can say, I cannot say senior because it's not a person, the most aged company, or the company which has been there for a longer period of time in the history of Pakistan for selling ice creams. But again, they have extended their product range. So what Walls is doing, Walls is competing on the basis of its age. But again, Umor has come in the market. They are competing well, but again, competing with a big brand which has been established years ago, it becomes very much difficult. So this is how the age of the firm point is referred over here. The age of the firm means the size of the firm becomes larger in that case. But again, obviously, if the firm has been there for many years, so again, the firm becomes the largest firm in the market. The availability of financial capital. What do you suggest? Any firm which would have availability of financial capital, that means more of the finance for increasing the investment, for increasing its operations, for increasing its activities. What do you suggest? If a firm has more availability of financial capital, would it be a bigger firm or a smaller firm in that case?
It'll become bigger because then later they'll start expanding.
Yes.
They're able to get more economies of scale. So yeah.
Correct. So this is how the availability of financial capital point proves that as it is more, then again it will be more easier to increase the size of the business. The type of business organization, again the type of business organization, there are some types of business organization in which it becomes very much difficult to grow. I'll give you an example of that. Sole trader. You would have learned it in chapter number 4 of your business studies book, types of business organizations. So in chapter
Yes.
4, the first one
Yeah.
is sole trader. Okay. You are saying something?
No, sir. No, nothing.
Okay. So the in the chapter number 4, your first one, sole trader. Sole trader is a one-man business. Again, you would have learned all the advantage and disadvantage in your chapters. But again, sole trader cannot go beyond a certain limit because of the limitation of finance. But if we talk about a public limited company, I hope you know what is a public limited company. Public limited company is a
Yeah.
company which sells shares to the to whom?
Public, basically. Yeah, like
Public limited company sells shares to whom?
like public, right? On the stock exchange.
Yes, on the stock exchange, correct. So it sells shares to the public. That's why the name suggests public limited company. Okay. So stock exchange. So a public limited company can go beyond a certain limit, obviously, because it's a public limited company. If the investors keep on increasing, the size of the company keep on increasing in that case. Okay. The second last one is saying internal and external economies of internal and dis economies of scale. Okay. Internal economies and
Okay.
what are these, we will see it afterwards, but I'll give you a glimpse of that, an idea, so that you can understand this now, so that we can proceed further. Internal economies and diseconomies of scale would be refers to those things. Internal economies of scale means those factors internally which are present in a business which helps the business decrease the average cost of the product. Okay. What happens, there's a mathematical formula for that. The total cost divided by the number of outputs, number of products. If we have $50 of cost and we have 10 output, so 50 divided by 10 means 5. But again, if we say this thing, that rather we have 50 in the numerator as the fixed cost, but now the output has increased from 10 to 25, so now the answer will be 2. Got it?
Yes, sir. Yeah.
So this way we can see that when we are increasing the output, our average cost is decreasing in that case. Diseconomies of scale, this is a concept which is used in the book. It refers to those factors which increase your average cost of production. There could be many, but the major one is that if you don't communicate your objectives, if you don't communicate well with the workers, the motivation of the workers become low, the morale of the workers become low, then again it will decrease the production of the company. Last is the size of the market. Again, if there is a hairdresser, so again the hairdresser cannot go beyond a certain limit, because expanding as a hairdresser it becomes very much difficult, because a person who has got a haircut 2 weeks back, so he will be very reluctant to come again to that same shop or any other shop for the haircut. But he could go for, he or she could go for any other service. But again, those services are small in nature and small in terms of amount, because the amount charged is not that much expensive, that is cheaper in that case. So that's the reason the size of the market depends whether the firm will grow to a large firm or it will remain the same. Any questions so far?
No, sir, no questions.
Okay, so the next one is small firms. Okay, what are the advantages of a small firm? What do you suggest? What could be the advantage of a small firm?
Uh, uh, like it's easier to kind of communicate. It's easier to know. Like there are less, since there are less people employed. It's easier to kind of know the business better. Like, there's not too many people where you have to hire and then you have to remember all of them. So that's how.
Correct.
And also, I think for small firms, we are doing about mass marketing and niche marketing as well. Uh, is that small firms, they help specialize in producing products for certain individuals, I believe. So that's another point.
Okay, so correct. As a small business, the biggest advantage what you would have is that a small business will be easier to will be easier to manage, as you said. That's correct. But again, the second advantage could be that if it is a small firm, the profit of the firm would be smaller again. So if the profit of the firm is small, the profit of the firm is low, so we will have to give less amount as a tax. So we'll save ourselves from the tax point of view too. Okay. Second thing. Third thing is that we have third thing is that we have one thing over here, is that the preference of the customer. If I'm a small firm, the customer can interact with me directly in that case. So if I can interact directly with the customer, so I would be knowing the preferences of the customer. And as a business, if I know the preferences of the customers very well, I can develop my products according to that. And if I keep on developing the products according to the customers preferences, so again customer will be happy with me and I'll be getting more of the revenue in the future time period. The third point is saying the owner's preference. Maybe as an owner I would be doing a lot of things after closing my business. I have to do a lot of work. Maybe I'm doing a job in the morning. Maybe I want some leisure time. So that's the reason the owner would prefer to make, or should the owner prefers to keep the business small in that case. The flexibility, a sole trader or the small business would not have strict rules for them. Again, in the if I compare it with the public limited company has to make its account public. That is, every other person should know the the profits of the, or the balance sheet of the company. But in the sole trader, you cannot say this thing, that you have to make your accounts public. Okay, so we have to have these advantages in that case. That's why it is saying flexibility. The technical factors are also there. Technical factors means that the technical economies of scale are not important in that case, because again, if a firm is a small firm, that there is no need of technical economies of scale or anything as such, because the firm manages itself very well because of being small in size. Lack of financial capital is also a reason for being a small business. Okay, as it will be difficult to raise finance for the sole trader. Location, again, it matters a lot. If you are locating in an area where there are less customers coming up, so that's again a problem for the business. Cooperation between small firms, it is very good thing. It's a benefit, because again cooperation with the firms is good in the industry. Specialization, that's very obvious. You would know that specialized, they become specialized in doing that thing. A restaurant who's only delivering one food dish becomes specialized, becomes more famous in the city. As in Karachi, there are a lot of restaurants who are selling only one dish, one food dish, and they have become famous because of that. People come from a lot of places to visit them. The reason being, because they're only selling one of the food dish in which they are expert. The last one is the government support. Government supports a lot if we talk about the small business. If it's a large business, again, the government will not be going
Yeah.
for the support of them, again, because of the reason is that because that large firm would have more of the options available for the growth or finances to keep itself going. And the causes of the growth of the firm, again, there are two types of growth. One is internal growth, another is external growth. If you talk about internal growth means going for opening of more of the branches. Okay, going for opening of the more of the branches. The reason is that if you open more of the branches, that is your own internal growth. But as we talk about external growth are three types of what we can say of growth types. First one is horizontal, and there is vertical, and the third one is conglomerate. So I'll be explaining three of these with the examples. The first one is horizontal, when you merge or take over a business at the same level of production. Let's suppose if you are a business, you are producing chairs, and there is another business out there who's also producing chairs. So you both combine with each other, you both collaborate with each other, you merge yourself, or you take over the other business at the same stage of production. You are manufacturing, the other business is also manufacturing. So you both are in the secondary sector. So you both merge, or you both take over each other, take over one of you, take over the other one, and in the end you get the horizontal merger in that case. Clear about this?
Yes, sir. Yeah, clear.
So the next one is vertical merger. Vertical has two types. You would have learned all of this in your business studies chapter number 3, but again I am
Yes,
giving
sir.
you a quick
Yeah.
recap, a review of that. Vertical growth has two types, backward and forward. If you talk about vertical forward, so if you are a chair manufacturer, if you are making chairs, you are making furnitures, you need to sell that business. If you are doing a takeover or a merger with a business who only deals with selling of those furnitures, you have done a merger or you have taken over that business. So that's an example of vertical forward merger, because I've gone to the next level of production at which you are standing over here. But if you go backwards, you are a table or chair manufacturer. So again, if you have merged or taken over a business who is supplying wood from trees, that becomes vertical backward. Again and again, I'm giving an example of a chair or furniture manufacturer. The reason is that because I know all the stages of a table or chair manufacturers. Okay. And the last one is conglomerate, when there are two businesses who are there in other sectors. That suppose if you could talk about Caterpillar, those Caterpillar businesses are dealing in road rollers. Okay, but again they have produced shoes too. So these two industries does not have any connection at all. But again, making road rollers and making shoes for the people. So this is somehow a diversified portfolio, or diversified what we can say growth in that case. So if there is a diversified growth when there are two industries, but there is no connection in that, a business does a merger with any other industry with which that business does not have any connection at all, that will be termed as conglomerate. A car manufacturer doing a merger or a takeover with a pencil manufacturer. So again, this will be a completely different industry in that case. So again, this will be
Yeah.
conglomerate merger. Any confusions?
No, sir. So conglomerate merger is basically where it's basically like two firms from like very different industries and different sectors. They like they like merge together, right?
Correct.
That's how it is.
And
Okay.
what they do this in order to take the economies of scale. Again and again, I'm saying economies of scale. This word would be clicking in your mind, but again, it takes some time. I'll explain all of this. Okay. So this question is that why do they do this type of merger? There will be greater economies of scale. The average cost will reduce. Because the average cost reduce, what will happen? Because of this, the consumers can enjoy lower price. The biggest advantage of this is that if the company or the business fails in one of the industries or gets a low profit in one of the industries, that can be compensated with the other industry. Maybe if I'm a what automobile if I'm in an automobile industry, I'm manufacturing cars. Okay. So if I manufacture cars, so if I'm getting low of the profit for cars in, let's suppose what I can say, in COVID-19. So I have done a merger with a pencil manufacturer. So I'll be getting a good profit from a pencil manufacturer at that time. So this way I'll be secure in all the options or all the methods. But again, there is a problem in that too. Consumers might think that the new business who has acquired this industry, this business in this industry, might not have the experience. The product quality might become cheaper because we don't have any experience in the next industry we are taking over. Okay, so these are the reasons which could be against this. So now we have economies of scale and diseconomies of scale. But before we proceed this, I suggest we do this in the next class and we proceed for a paper practice.
All right. Yeah, that's okay.
Because the reason is that giving you a lot of information in a class, again, it will be easier for me, but again, it will be difficult for you to remember this. So we need to have a quality lecture rather than having a quantity lecture.